and weakness should be bought. Tom, is that the bottom line in Apple?
That is the bottom line. So if you look at a week ago, the market was basically selling off everything indiscriminately, anything that had any exposure to Apple. Apple, I think, was down 4.5%. And we put out a published note shortly thereafter that indicated, things may not be as bad for Apple as they seem. Tim Cook's done an amazing job lobbying in the U.S. We would argue Apple's big enough that they could lobby both the U.S. and Chinese governments. So the impact on Apple from tariffs may not be as bad as many fear.
Let's say they're not successful in their lobbying efforts and all the tariffs go into place and it's December 16th at this point, Tom. Who is paying for those tariffs? I'm just trying to figure out is Apple paying for it? Are they making their suppliers pay for it?
Sure. So if this was a conversation we had, say, 2 or 3 years ago, we would argue that Apple had pricing power for all of its products. And I think the lesson we've learned over the last year is that given the maturation of the smartphone market, they don't have as much pricing power in smartphones. And they may not have pricing power in smartphones again until they launch a 5G device, which could be next year or the year thereafter. So I think that what you're going to see is Apple in those products where it has pricing power, passing it on to the consumer, in other instances, trying to get it from their suppliers, and in our argument, getting it from the Chinese government in lower currency. So I do think that there are ways that Apple could offset the impact without passing the cost to the consumer.
Now, Tom, this is Joe Zeidel here. For not only Apple, but the other companies in your coverage universe, is this going to become more of a margin story where they don't have that type of pricing power?
I think that's a great point. And the way that I think about it is, in our coverage universe, Logitech has been dealing with this the longest. And if you look at their June quarter, they actually had a 40 basis point increase in gross margin despite tariff pressure. And what did Logitech say going forward? They said they're going to selectively take price. Logitech, somewhat like Apple, can do it because they tend to be number one or number two in the markets they operate in. So I do think the margin story, generally speaking, from tariffs will not be as bad as people anticipate. There's a lot of levers these companies can pull to mitigate tariff-related risk without having to do price.
So market leaders might essentially have the power to go back to their suppliers and say, okay, you need to absorb these hits. The other question that I have regarding an Apple and some of the other companies in your coverage universe is they tend to not hold a lot of inventory, right? Because they've spent all these years building up these amazing supply chains. They're able to get their products, as quickly as they need them in order not to carry a lot of inventory risk. But as they start to reconfigure supply chains and go to smaller volume type producers, are they going to be taking more of these products onto their inventory? Is there other risks that we ought to be thinking about now?
Sure. So there's two risks. One, I think that they can respond to tariffs by essentially getting as much product in the U.S. ahead of tariffs or to the end market where they intend to sell it. And two, I think that what you'll see over time, meaning years or maybe multiple quarters, but not months, they'll move their supply chain to places like Vietnam and out of China. So I think on a short-term basis, I think navigating inventory can be an effective way to mitigate tariff-related risk. On a longer-term basis, I expect more of the supply chain to not directly include China.